Hey guys, Richard Matthews with Matthews Wealth Management. Today we're doing a market update through the end of April. Today is May 1st, 2020, so what we're going to do is see how our changes that we made in mid-March have panned out in the last month. We're going to look at the last quarter as well as year to date. So without further ado, let's jump into it. The last month has basically all been recovery. The only asset class that has not had a rebound has been oil. Oil supply is basically to the rim. We can't hold any more supply. You may have heard of the negative $37 per barrel contract price that happened, and we can see that here in the numbers. But if we're going through U.S. equities, there's kind of a trend that's starting that we capitalized on in our moves in mid-March. So the large cap value 1 month at 10.8, then 11 on core growth. We see a pretty good jump to 15% on the month. Same thing when we get through the mid caps, 12, 12, 16. That's a pretty good little jump there. And then small caps, we see it kind of waving at the top. Small caps are going to have a little bit of a hard go with what we've done with our economic models as far as making money easy to get to. A lot of the EIDL and PPP stuff has really backfired with what we were trying to do, freeing up some liquidity to keep businesses running. But if we jump into international emerging markets, that makes a lot of sense actually, where we have 6.5 on international, a rebound of 9 of emerging markets is typical. And now we'll jump to bonds. The long-term bonds monthly were up 4.5, intermediate 1.4, and short-term only 0.6. That's a little bit strange, honestly, where we have the 0.6, 1.4, and a pretty big jump to 4.5. Tips have been very interesting, and a lot of this has to do with what the Federal Reserve is doing on their balance sheet. We also plummeted interest rates. We've got inflation coming, and that's the point of tips. So keep an eye on that. Real estate had a decent rebound, 9.2. Oil, again, has fallen off the face of the earth. Again, we've shut down production in a number of areas in the world, and we're running out of storage places as well. But gold is doing well continually. A lot of that has to be based on the inflationary pressures. And if we look at the Wilshire 5000, which is a total stock market type index, we're up 13.5 on the month. And anytime you hear somebody say moderate, just think of a 50-50 stock bond mix. So 7.75 is what we're looking at there. So let's jump to the quarter. Again, we'll start to see this trend really play out on value to growth. We go from 14, 11.5 to 1.4 on the downside, which is just tremendous, showing how much stronger the growth side of that asset class is versus the value. Same thing in mid caps, 25, 17, and 5. That's just, you don't see that often. So those moves we made from value to growth in the middle of this were definitely the right route. Small cap value, 27, 21, and 10. That's another example where values are just not the place to be. International and emerging markets are kind of flipped, in my opinion. I would have expected them to be opposite, but not a huge discrepancy. We see the same issues in bonds from a 1, 2, and 5.5. Typically, you don't see that big of a jump to the long terms, and again, it has to do with the low interest rates and liquidity that we're seeing in the bond markets. Tips are high again, the 2.37, and then real estate. You can see we were down 19% in the last 3 months here. Oil down 76, just terrible numbers. Gold holding steady at the 6.69. Wilshire in the last 3 months to take care of the big downturn through COVID-19 is down 10.1, and then the moderate is down 8. So let's jump real quick through the year to date. We're just adding January into the mix here. Negative 17, negative 11, and a positive 2. That's just insane, just crazy. A lot of that has to do with our FANG stocks, but it also plays through here in our mid caps, 27, 17, and a negative 3. Etc. Just rinse and repeat. International and emerging, again, kind of flipped, but not too terrible. And this really illustrates what we're looking at in the bond market. Bond market has gotten pretty crazy lately. So a 2, 4, and 11, that's just a tremendous jump there. I know we've got one holding on a 1 year for long-term bonds that's up 40%. You just don't typically see that. So we've got some major financial system pressures going on that we've created from our response in the economy that's definitely going to play out. And you can see the Treasury inflation protected securities at 4.5 year to date. Real estate's still down 17, oil's 80, gold's up 11. The Wilshire, same thing, roughly 10, and then moderate down 8.5. So just to kind of summarize at Matthews Wealth Management, our practice is down 7.5 year to date. So if you compare that to the world of moderate, we're doing well, very well. Most of my clients are retiring or retired, or they're running businesses. So we have a very unique spread of risk tolerances and the amount that we have in equities versus bonds, commodities, etc. So best account I've got is up 8.1% on the year, which is amazing. The worst one we have is pretty speculative, down 13.45, so really high risk there. But things have been interesting year to date and also in the month of April. So stay with us, come back, and we'll see what May's got in store for us.